Snipers, you have to see what's happening in the Bitcoin price right now, as this is a Saturday live stream. Smash the like button for the YouTube algorithm if you support this content. Let's dive straight in and talk about some important things on the chart, starting with this ascending sell pressure on the daily chart. This is extremely concerning to me. And so for this daily close that's coming up while you're watching this video, we want to see this change. We do not want to see further sell pressure. Hopefully, we could even put a stop to this by seeing some green volume come in a green candle close. But that's the first thing that I want to start off with. But we do have this symmetrical triangle that Bitcoin is currently in. And this is really our first market structure inside of this consolidation that we are now going to be able to track. Notice how Bitcoin so far has not done what the S&P 500 closed the week doing, which was getting back above its monthly open. And so this is still potentially on the table for this 3-day extended weekend for Bitcoin to get back above 20,000 US dollars, just to follow what the S&P 500 has done. But I will say it is very concerning to see this rise in sell pressure on the daily chart. This needs to come to an end here very soon if we don't want to expect further downside. And if we look at what's happening to the outside revolving parts, notice how the Ethereum to Bitcoin chart is up today and still holding 53,500 Satoshis. This is an extremely important level for Ethereum to hold. And that's why we're seeing some altcoins up over 1% or maybe even up over 2% today, while Bitcoin is having its cup of coffee just below the 2018 previous all-time high. Josh, I'd love for you to come in a little bit earlier on this video and talk about what you're seeing on the charts. And then we'll discuss a couple other things that I believe are extremely important to watch and some factors that are really affecting the market, like the major upside right now with the US dollar on a macro scale, Celsius lowering its liquidation price to 12,200. And then we'll look at some popular charts for those that monitor on-chain metrics like the stock to flow model, relative strength index, and realized cap. But Josh, what do you see happening right now? And we'll get into some more fundamentals.
Yeah, of course. So I'll go ahead and share my screen, and I'll kind of show you what I'm looking at here. So essentially, the main thing we're looking at right here, besides these critical horizontal blue lines, which have the most weekly support touches, and this yellow line, which I call the bottom indicator, which is customly made by me. It's a very fancy line that I've drawn. It's a very fancy algorithm. No, not really. It's if you zoom out here on the weekly, as I've shown before, it has the most weekly touches, and besides March 2020, this has always served as the bottom. And the fact is, we reached our destination once we hit the yellow line and immediately turned back around. And so that told me that was pretty much the bottom, if not the exact bottom. We might have a March 2020 kind of situation where we come below it for a period of, maybe a few weeks. In this case, it was 7 weeks. So let's hope that we don't get that type of retest for those levels. But it is very possible as well that we can come down and do a double bottom at 17.5 or maybe hit the yellow line. So I think we're very close to the bottom. If we haven't hit the bottom yet, I believe we're very, very close. And it's not just the horizontal lines. It's not just, the yellow line. It's also these vertical lines marking the beginning and end of each bull bear market cycle. So we're due to print, another one of those very soon. So what
do you think about the immediate short term? Do you think that we could see this drop maybe this weekend?
Yeah, exactly. So, I mean, it is a 3-day weekend. We have these very critical long-term lines of of resistance right here, descending. And so that's really the main thing before I get into the immediate short term that I wanted to cover again, is because, as we always say here on the channel, when in doubt, zoom out. And so let's go take a look at the 4-hour, and I'll kind of get into what my immediate short term kind of looks like. So what we have here, as Naeem has described, which, by the way, he's a genius for pointing this out. He's the first person that I know that has pointed this shape out, which is this symmetrical triangle. And what we're seeing here on the 4-hour is, first of all, we have the $20,000 range, very, very close to the center of this entire diagram. So So that's one thing that's kind of a little abnormal.
It looks like we totally rejected 20,000 on your chart. Look at that 4-hour wick that tried to get towards the weekly open. Look at that rejection. I mean, if we were to just like look at this as garden variety market behavior, I mean, we're looking at a break of a major support. The bulls tried to rescue the support level, got above it, broke back below it, and then tried one more time to get above it and got rejected. That's what I'm seeing on your chart, which I can't see that on my chart because your blue line is a little bit different than where my levels are. And so this, to me, though, look at that candle body completely getting rejected off of that $20,000 level.
And there's a reason I have my blue line at 20,043 as opposed to only 20,000 or 19,700. Or there's people that have different lines in different places, but you'll see the reason why is because on the weekly chart, it has the most weekly touches. You know, I'm not really counting many of these wicks below. And not only that, but you know, I've had this line drawn out here for a very long time, how the price action respected it. I mean, look, it literally went all the way. This wick literally hit the weekly open, but the candle body closed exactly at this yellow.
And the monthly open was exactly at that blue line. That's not a coincidence. So I take that yellow, that blue line, and I think that's very important.
Not taking these psychological levels and saying, oh, horizontal line at 20 or oh, this and that. It literally is all for a reason. Because if you go back to the weekly, which I'll cover just real quick before we get into the price action, you know, you'll see the most candle touches, you know, right there. You had 1, 2, you know, and right here. I mean, like you said, you know, it all lines up perfectly. And it's just, and that wick up to 21,000, you know, that kind of, I mean, it literally hits the weekly open, and then we have the monthly open. So let me explain kind of where we're at right now, in my opinion, as far as the chart. So first of all, we have this yellow bottom, which makes me feel safe. If I were going to go long, you know, I would feel, you know, safer rather than usual, more safe than usual, I should say, because we're protected by this yellow line. It's always been, every time it's hit this yellow line, it's always been the bottom, besides one specific case in March 2020, which even then it came back up and tested it as support, and then kept continuing to the upside. So we can very confidently say, you know, not based off of feelings or emotions or what we think or what we predict, we're going based off of chart price history. So we can confidently say that this basically resembles the bottom, if not very close to the bottom. So that's why I feel good about taking out a long. But exactly what you're seeing, what you just mentioned, Naeem, is very concerning as well, because we're in the middle of this asymmetrical triangle, which is neither bullish nor bearish. Now, here's the thing. You're absolutely right. Now, we did have that Adam and Eve pattern play out. You can see right here, we had Adam, then we had Eve, and then what happens with Adam and Eve? You know, it's a retest. But here's the thing, though, is that we didn't actually hit the support and then hit the support as resistance and then get rejected. We actually came, it was a wick all the way up to the weekly open. And that's why if you guys look back a live stream, I think it was last live stream, we talked about the short that I took at 21,000. I saw it wick up to 21,000, and it was so fast, and it immediately hit 21,000 and came back down because it wasn't having a cup of coffee, kind of like we are now under 20,000, which could be actually a bearish situation. And we are heading into a 3-day weekend, you know, so going long before a 3-day weekend in the middle of a bear market, you know, it's a little counterintuitive. But I do want to just say that, so we hit 21,000, okay? So ignore the fact that I shorted at 21,000, right? And made money. But the thing is, we hit 21,000. We immediately got rejected. We tried to come back up. We didn't even make it to the monthly open. We're just going to call 20,000 the monthly open, because that's daily, monthly, weekly open right here, which is another thing Naeem has showed with me. Because once again, I am a student of the great Naeem Elevated. But here's the thing, guys. On top of that, we have the volume weighted average price, which we came back up. It's just getting increasingly and increasingly more bearish, because think about it. We came up, we hit the top of the descending, or in this case, asymmetrical triangle, came down. Had a dead cat bounce, which we called. We said, hey, look, we're going long at 20,000. You know, it's going to be a dead cat bounce most likely, so get in and out. So hopefully you guys, you know, paid attention to that and weren't in this trade. But even if you were in this trade and experienced some of this volatility from the monthly close, you would have still hit the target that we originally set at the weekly open. So you still would have been in good shape. But here's the thing, and I also said you have to be careful. You want to set a stop loss right below the market structure, because in reality, you know, with a monthly close and that type of volatility, you could have the world's best analyst in the entire really universe, and it's still going to be there's still going to be some murky water there, right? So what we're observing right now is increasing bearishness, only because we have hit this right here at the top. The descending or the asymmetrical triangle came down, wicked above to the weekly open, hit this to complete the Adam and Eve pattern, which retested right here at 20,000, came back down, went back up, hit the VWAP, which is the volume weighted average price, which is the most important moving average there is as far as like day trading, aside from the normal moving averages, you know, the 200 a week, the 200 a month, you know, and all that stuff. But the thing is, we hit the volume weighted average price, got rejected, okay? We came here and we hit the daily open, and we're getting rejected right now at the daily open. And so we're kind of in this battle right now. And if you look at this 4-hour candle structure, you can see we're getting bought up a little bit, but we're still having resistance right here at the daily open. So we're at this very strange time in history right now, where we're very close near to the end of the bear market, but we still are arguably in a bear market, because until we hit, you know, these lines of resistance that I showed you up here, these red lines that are, you know, these long-term red lines, and we're still not out of the woods, as Naeem would say. But it's a very interesting situation to be in right now, because we're so close to this bottom, which is the yellow right here, which is always, 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 in the last 12 years of Bitcoin's history, predicted the bottom. Besides one time in March 2020, which was a super black swan event, which it didn't stay below the price very long, but we're right between the daily open and the bottom line of this asymmetrical triangle. And so there's going to be eventually, and we're going to find out very soon, but eventually something has got to give. Either the daily open's got to give, and then we're going to come up to the monthly open, and then, or essentially, you know, we're going to have a breakdown here, and then maybe possibly a retest of the double line, because there's, or the golden line, a double bottom. The reason why I think that could be possible is because there's so many people that realize that we're getting very close to a bottom. There's so many people that, you know, have marked out and realized that we are beginning the next bull cycle here before too long, relatively speaking, in the near future. And so I believe a lot of people are going long, and it's just one of those things where usually the market does the complete opposite of whatever you think it's going to do. And so, as I mentioned on the live stream, which was yesterday, the most mature, disciplined, strategic thing to possibly do right now is not to go long or short until we have either a breakout or a breakdown. And then from that point, you would enter the short or you would enter the long up here. But I do want to admit that, you know, I woke up at like, what was it, 4:30 or something like that in the morning, and I checked the charts on my phone. By the way, it's the first thing I do when I wake up, but I usually don't wake up till like 8 or 9, but I did check, and I saw that we were right at the very bottom, or very close to the very bottom around here for, you know, for this pattern. So what I decided to do is enter a long, knowing, and I didn't use much leverage, and I'm not using
I'm in a long as well right now.
Yeah, so I'm not using much leverage, and I'm not using much of a percentage of my account, because I'm expecting that there could be a possible downside. Every time you enter a trade, you always want to expect that the worst is going to happen. So this red dotted line right here is my stop loss. So I'm entered right here. I think I'm in profit just a little bit, not much, but I can clearly see room to the upside. And like we mentioned before on the channel, these blue horizontal lines, in this case 20,000 range, it's very magnetic to these blue lines.
100%. I'm going to let you get back to what you're saying in just a second. I want to mention a couple of things before. And I see we got Billy, who just said, I woke up early enough for the live stream. Thank you for tuning in. Josh and I truly appreciate each and every one of you. And I will mention Malik's comment about altcoins in just a second. We'll cover altcoins, talk about if there is further downside. But Josh, you did text me at 4 a.m. saying that you entered a long, and I told you last night I was going to sleep, and I wasn't able to go to sleep until I entered a long, because Bitcoin was sitting here at 19,000 and it hasn't yet tested the monthly open. And so knowing that we've already come below the monthly open, I am at least expecting, and all we're asking for is for Bitcoin to come test this monthly open at 20,000 for this long position. And so that's why I personally entered into that long. And then like you said, Josh, that blue line is magnetic. And so it wouldn't be odd behavior to just come up and test that during the weekend. Anything can happen during the weekend. And so I think it's certainly on the table. And the reason I justified this long position right now and right here specifically is that even if we break down further, I know 17,204 is a major level of support. That's right around where your yellow line is. So I'm sure there are many traders that have support here. I've always actually wanted to see, I've wanted to inquire with TradingView to see if we can get heat maps of where everyone has their horizontal lines on their charts. Wouldn't that be crazy? I saw somebody in our Discord say that once, and that was like the most brilliant idea I've ever heard. A heat map of everyone's lines on their charts. That would be cool. But I'm sure a lot of people have lines drawn here as major support. So, my liquidation price at this point is below 17,000. I think my average entry is at 19,300. And so I'm just asking for a nice little push to the monthly open, do exactly what happened to the S&P 500. 3% on 10X is 30% profits right there for a nice weekend, July 4th, Independence Day trade. And if we start to see any downside, then I'm going to add to the position because I do believe that 17,204 will hold if we get there during the weekend. Now, I think it is important to mention the downside risk right now on the weekend because of the rise in sell pressure and rise in sell volume. That's obviously not something you want to just buy into. And so I think there is some risk there. But based on what we're seeing and how the equity market's closed, I feel a little bit more confident with this trade since we've yet to come and test the monthly open. And you talk about the realization that we're potentially at a bottom or close to a bottom, and every indicator on chain is telling us that right now. You can see the Bitcoin realized cap below the 200-week moving average, obviously, and in historically areas where they have been very good buying opportunities. You can see in the blue, every time we've come around that area where things start to turn blue, when you get below that 200-week moving average, it's been a very strong time. So I think everyone's seen this stuff, so I'm not going to go too far into it. The relative strength index also at historically, I think, all-time lows right now. So obviously in the past it has been great buying opportunities, but even the stock to flow model, showing that we're much and below what Bitcoin's quote-unquote intrinsic value is. So I'm sure everyone's seen these charts. So everyone is saying, well, this time it's different, right? 2022 is different than 2012 to 2021, right? 2022 is something abnormal. And when somebody says that, I say, well, there are two things right now that I'm primarily concerned about for the cryptocurrency market that are actual factual data points. And the first one is the fact that the US dollar is breaking 20-year highs. I think in the macro, this is having a direct effect on what we're seeing with price action. And this also explains why people are saying we don't care about the on-chain metrics saying that we bottomed. We haven't bottomed. We're seeing something that we've never seen before. We're entering into a time that we've never entered into before. I think the reason people are saying that and feel that way is because of the DXY breaking 20-year highs. We don't know where this is going, but in the macro, the DXY is clearly bullish. And so this right here is one of the more important factors. And then if we want to assume that Luna got liquidated and that caused Three Arrows Capital and it caused Celsius and all of these interest-bearing account companies to pause withdrawals, Voyager pausing withdrawals, if we're assuming they're bad actors that are going after people, then we have to monitor the Celsius situation. I think this Celsius situation is important. They've lowered their liquidation price for their WBTC position on MakerDAO to 12,243. So I think this is one of those things where fundamentals are 10%, technicals are 10%. So we have to keep that in mind, that 12,243, if the bad actors really want to liquidate Celsius, they're going to want to get priced down to that level. So, those are things that are just in the air. It doesn't mean it has to happen, but I think it's interesting that those, scenarios and those, factors are there on the table right now. With Celsius, they've still paused withdrawals. And so, I think that it's kind of making the situation worse, and it's also making this price action, what it is, which is the fact that, we talked about this before, the S&P 500 got above its June 15th candle high when we formed that higher high, but Bitcoin wasn't able to do that. It was supposed to go to 24,000, but it didn't. It was almost as if there was this sort of invisible downside pressure on Bitcoin, not letting it get further up. It's like you said, Josh, remember when we pumped to that weekly open? It's like Bitcoin just reached a point where it was asked for some credentials and it couldn't provide the credentials and it got rejected, right? It tried to go above the weekly open and then it was asked for some credentials and it didn't say anything. It just started walking backwards, right? It was like rejected. Bam. Why is it getting rejected? Is there that real invisible force that's actually acting upon price, which maybe is, we don't want Celsius to re-enable withdrawals. Maybe the SEC is trying to make a statement here. Maybe they are trying to make a statement against a U.S.-based interest-bearing account company because we haven't seen one of those companies go insolvent yet, right? And so I think that those fundamentals are certainly on the table, but we're focused on the technicals here. So I'm going to let you continue what your thoughts were, Josh, but I do want to quickly talk about altcoins. I know Malik was asking about, could altcoins see further downside? Of course, if Bitcoin sees further downside, altcoins could see further downside. I think that's always a very clear opinion. And alongside that, Bitcoin dominance hasn't yet reached its main target during bear markets, which is the 200-week moving average. And so I think that we have to still be very cautious with altcoins until Bitcoin gets its dominance level towards that 57.2% dominance area. And it could happen in different ways. This could happen actually with the market going up. We've seen that happen before with Bitcoin dominance, where the market has increased in market cap. Bitcoin outperforms altcoins, and we see Bitcoin dominance move up. And so this doesn't have to happen with the whole market dumping. And so I think that there is still some hope for altcoins. I think you have to just approach the altcoins as we've always talked about on the Snipers channel, which is, number one, if you're using the altcoin, if it's a project that you use, like I use Bitcoin Cash because there are certain exchanges overseas. And for me to pay employees and partners that are overseas, I have to use Bitcoin Cash because my only other options is Bitcoin or Ethereum, and the fees don't justify using them versus Bitcoin Cash. And the exchanges overseas that I'm using only accept Bitcoin Cash. So Bitcoin Cash to me is something I accumulate, and I'm fine accumulating it under $100, which is where it's at right now, because during a bull market, it will typically pump just like Bitcoin does. And in a bear market, it will dump, right? It's almost as if altcoins are very similar to some of the exchange traded products that you see, like MicroStrategy and Grayscale Bitcoin Trust, where they trade at a discount during the bear markets and they trade at a premium during the bull market. So you have to kind of approach it like that. So number one, altcoins that you use are certainly altcoins that you want to stack up in a bear market. And then when it comes to just altcoins that you've heard of and people have recommended, or altcoins that you don't really understand, those are the ones I think you should be more cautious about and maybe avoid during a bear market. And I think that that's the best way to approach altcoins right now. If you have bags of altcoins and you want to reduce risk, there's always the option of moving them into Bitcoin, and you still have the potential of upside if we move back into a bull market, right? So there's different ways to approach the altcoin market, but until Bitcoin dominance gets to that 200-week moving average, I think that you have to be ready to see altcoins come down even further. It doesn't mean it has to happen, but with Bitcoin dominance still so low, there's still a chance for Bitcoin. And I believe at some point, Bitcoin dominance will come back towards 57.2% dominance. It doesn't have to happen with a major dump. Maybe we've already seen the worst for some altcoins, right? So I think that that's very, very important to keep in mind. Like, I'll give you an example. If you look at Cardano, I don't believe we actually breached below the 2018 previous all-time high yet. So just notice how with Cardano, the 2018 previous all-time high at 38 cents, we never breached below it despite all of the bearishness. As a matter of fact, from the current low of this bear market for Cardano, we're up over 10% with where price action is right now. And so, with maybe just one nice pump for Bitcoin, Cardano can get back above, let's say, 65 cents. And even if Bitcoin comes down further, Cardano may have already bottomed. We don't know, right? It's following one of the rules, which is previous resistance turning into support, which is the previous 2018 all-time high right now holding as support. So, if you use Cardano, if you're using their NFT marketplace, if you're using them for any specific reason, if you're in Ethiopia using Cardano, then maybe it's a good time to buy Cardano. But that's the thing. 10 years from now, 12 years from now, what's still going to be around? The coins that have use case. But even beyond and further to that is we have to start observing which companies are surviving this bear market, because those are also companies that are going to do very well in 10 years. Like, for example, Robinhood and Coinbase and FTX. Those are 3 companies right now that are still very solvent. They still have cash flow, and they're starting to acquire different parts of the market, right? You see FTX acquiring BlockFi, for example, and providing loans for different companies. Now I'm hearing rumors that FTX might acquire different miners. And so we have to realize that those companies, the companies right now that are surviving this bloodshed, the companies that are surviving the deleveraging of the market, those are companies that are probably going to thrive during the bull market. So maybe Robinhood stock is something good to invest in. FTX, if they have a native token come out, that might be a smart idea. Binance, if they have their native token BNB, that could be a wise option when it comes to altcoins, right? Because the companies that are surviving the liquidations right now are the ones that are going to thrive in the future, right? So every inch that's gained during a bear market, during a bull market turns into 10 inches, right? And so even a little bit of progress during a bear market, during a bull market, like, here's something I know. Every time I've looked back from a bull market to a bear market, I wish I did more during a bear market, because in the bull market, it's always exaggerated. The work that you do in a bear market gets exaggerated. And so I think that that's very important to monitor. Baby Jesus says, Monero, don't be scared. Cordy says, if you're such a great trader, why are you making a video for 67 views? Well, we have 67 people watching the live stream right now. All of our videos get thousands of views, and we provide this content primarily for our Discord community, which is one of the largest cryptocurrency Discord communities in the world. I don't believe there are any other cryptocurrency trading Discord communities with over 25,000 members. If there is one, let me know. But we have one of the largest cryptocurrency trading communities in the world. That's why we make these videos, QWERTY. And so keep on hating. Let's see, another hate comment. Such retards. Shame on them.
Just got hacked.
How's Naeem repeating the same mistake he did in 2018 bear market? He was bullish the entire bear market. That is just so funny.
You can still make.
I don't think it was wrong. Well, no, I'll mention the comments, right? I love it. I love when they come in, because that's how you know you're in a bear market. I don't think it was wrong for me to be bullish about Bitcoin in 2018. What do you mean that was a mistake? In 2018, Bitcoin was at $7,000. I was bullish about it, and I was going around the world speaking about it alongside Steve Wozniak, Gary Vee, some of these people that you guys read about and listen to, and most likely, you know, somebody like QWERTY behind the keyboard putting out hateful comments will never ever get the opportunity to meet, because obviously they're locked inside of their mom's basement right now making irrational comments, because in 2018 being bullish was actually a good idea based on the charts, right? Because Bitcoin's at 19,252 right now, whereas it was at 6,000 US dollars back when I was bullish about it. So your comments obviously don't make sense, and so we'll go ahead and ban them from the channel, and we'll never have to worry about them ever again. Put user in timeout. That sounds a lot better, right? It sounds like where this person deserves to be. So let's see. Hannah King says, are you guys in a short? No, we are not in a short.
We're not in a short.
Alex says, he's a troll. We all like your technical analysis. Thank you so much. Let's see. Salute, bro. Keep up the great content. Buju says, there are other groups with more people I've been in, but you rock, bro. Keep it up. Not trading discords. You'll see a lot of like discords that are all based on NFTs and discords that are based on different parts of the cryptocurrency market, but we're specifically focused on technical analysis, and I haven't seen a bigger one, so that's important there. Ahmed says, best analysis on the web. Let's see. Zora says, been subbed for years. Love your videos. F the haters. Alp says, according to Adam and Eve patterns, should we see 17,200? I think it's very likely that if we break below the current candle low from where we saw the pump towards the weekly open, as I mentioned yesterday, and so that candle low is exactly 18,626, that we could see 17,204. But there's still justification to make that we've reached a final destination here from this initial low, because when we did get below 18,000, we immediately turned back around, and we have not seen price action get back below 18,000. So when you reach a final destination, you will typically turn right back around. And so I think there's certainly justification to say that we have reached a short-term bottom, and that's the fact that we immediately turned right back around after going below 18,000 US dollars. And we know what happened here. We know that the Canadian purpose spot Bitcoin ETF sold 24,000 Bitcoin into the open market when this happened. And that was the reason we saw Bitcoin break below the 2018 previous all-time high. So we could also argue that 18,626 is significant, because once we reached that destination, we did immediately turn right back around. Josh and I know that for sure. We saw the price go right there from 18,600 straight up to 21,000. So the other thing is, though, is we rejected 21,000. So that's why we're squeezed in between this area here. And that's why these two levels are the most significant, in my opinion, right now, to understand where the next move is going to take us. So 18,626, let's say we hold above that, we start to trend back above 20,000. We do what the S&P 500 did. Equity markets open up after 4th of July strong. Maybe Bitcoin then breaks above this market structural resistance in the weekly open, which is at 21,000, which, by the way, tomorrow, this green line, our previous weekly open, will get up there. Let's say that happens. Now we could say, okay, this wasn't a surprise. Bitcoin reached its destination below 18,000. It immediately turned back around, and then it formed a higher low, immediately turned right back around, and now we break out, and potentially we get to 24,000. Now more and more people are going to jump on the boat and say, oh, maybe Bitcoin did bottom out, right? So I think that is kind of the bullish case there. The bearish case is on the daily chart right now, we have ascending sell pressure, which is very concerning, and that even in the next 24 hours or into this 3-day weekend, we break below 18,626. That wasn't the final destination. That wasn't the higher low. The higher low fails. This becomes a rejection. The Adam and Eve plays out. And then we see a test of 17,204. That forms a lower low. And now things get a little bit more bearish. And so I think that that's where we are right now. And obviously we have to wait to see this progress and mature. So let's see here. Elite Integrity Group says, hi, Naeem. Because of how long the 2018 bear market took, is it possible we could get to somewhere around 5 to 3K if it has to take that same amount of time? Well, here's the thing. With the VPVR, there's one area, if we really break further below, and let's say we prolong into another 6 months of bear market territory, right? If you look at what happened in 2008, from January of 2008 to June of 2008, U.S. oil skyrocketed, right? So we can even pull that up. And the reason I'm mentioning this right now is because we are looking at the same time frame as what's happening right now. Just notice in 2008, from January to June, what we saw happen to U.S. oil was this major run up. And then by June and the start of July, which guess what? It's July now. What happened? Everyone finally realized we were in a recession, and then oil dropped significantly. Even below where it started its run up, right? And so that's how 2008 played out. And it wasn't until December of 2008 that we bottomed out. And this drop in oil also took down equities with it. And so it's just kind of odd right now that from January to June, what has oil been doing, right? Oil has been running up. And so if oil has started to top out and it starts to curve back down, and then for the next 6 months, that takes even more equities with it. That would also probably take Bitcoin with it, because Bitcoin has not experienced anything like 2008 before, where not just oil comes down, but housing market starts to relieve its pressure. Then, that could potentially bring Bitcoin down to further levels of downside, and then maybe by the end of this year we bottom out, like what happened in 2008. I know, I think these are all scenarios that are potentially on the table. So I mean, who knows? I mean, these are just guesses, but you know, with Bitcoin coming down to that level, uh, you know, the one thing I'll say is the most amount of volume, if we were to just factor in the bull run from 2017 from, you know, these two recent cycles, obviously the most amount of volume is down here at 10,000. So, were you gonna say something, Josh? Sorry for interrupting.
Oh no, no. I mean, I got a few things to point out, but please continue. This is good information. Unless you want me to take it.
Take You can take it, man. If you got the chat, you can also pull up the chat if you want.
Yeah, I've got the chat right here. So it says CPE has 3 months of decline. Are they talking about CPI? You think maybe? I was
Yeah,
gonna say, because the thing about that is like 80% of U.S. dollars in existence were printed in the last 14 months. So I mean, you know, I really doubt that inflation's at 8% or whatever the hell they're saying. Then you have a couple zeros after that, maybe.
yeah.
It says WTI is down 15. I appreciate the good content. Um, yeah, so right now I'll go ahead and share my screen as well. But right now, guys, the whole thing is that, you know, we are making higher lows, and it's up to us to determine, you know, how long we think that's going to go. So going back here, the thing is, you know, Naeem and I also have the saying. It goes like this: we're not asking for too much, because especially if you're trading on leverage, you don't need huge, gigantic moves, right? Even though I did short this candlestick at 20x just because I just felt like it, right? But usually I never go over like 8, 9x. 8x is where I'm at currently right now with this long. And like I said, my stop loss is right here because, you know, even if it does, like, even if you lose 1 to 2 out of every 10 trades or whatever the case is, you know, you just want to limit your loss, right? So that's why my stop loss is literally right here at 18,500. And the whole thing is for us to break below that. The reason why my stop loss is here is because if we broke below that, then we would possibly, you know, discounting the 17.5 right here, we wouldn't be technically making higher lows and higher lows, that of which we are right now, right? Because we have let's just kind of draw this out right here. So we have this, you know, higher low, or this low right here, which is really, really dangerously close to this yellow line. So that tells me we're near the bottom. You know, then we have this higher low right here. Technically, you could call this a higher low. And it all respects the pattern that Naeem was brilliant enough to discover, which is this asymmetrical triangle. And so the whole thing is like, my whole thing is, look, we're not asking for much. We're only asking for the monthly open, you know, which is at $20,000. And here's the thing: if we break below this and my stop loss gets triggered, then I'm probably just going to immediately enter short, because you're not going to win every single trade. And honestly, I probably should have had more patience and waited for a breakdown or a breakout. But the way this is gearing up right now, sometimes you just kind of got to place the bet before the bet plays out. So the whole thing here is I'll kind of show you what I think is going to happen in the most bullish scenario.
Somebody said, "What if the yellow line breaks?"
Well, then basically the yellow line breaks, then we'll have a situation like we had in March 2020, which is where for about 7 weeks, this is the weekly chart here, for about 7 weeks, that is the only time in March 2020 that it was broken. And basically, yeah, and then we spend a little time below it and then came back up, tested it as support again. So it's very common to do a double bottom on this yellow line. So that's another thing that kind of concerns me, is if you look right here, you know, this is a bottom here. We came up, we retouched it again.
Oh, that's interesting.
Very, very bullish double bottom. I mean, look at this one. We broke through it March 2020. We came up, tested it, and then we came back up and tested it again. And so that tells me if every single time that this thing gets hit or this thing gets triggered, if there's always a double retest, there's never not been a double retest, then that tells me, when we pull up the 4 hour, that it is very possible that we come and retest this line again. It only makes sense, especially after a bearish pattern like a double top. You know, you can call it an Adam and Eve if you want. I literally call it a double top because that's what it is. But anytime you have a bearish pattern play out, typically on a higher time frame, I mean, this is like a 4 hour, you know, it's not uncommon to see, you know, us retest 17.5, which would be a double bottom, which would still be bullish, even though the price is going down. In the macro sense, it would still be bullish because a double bottom is a, it is a bullish pattern, but it wouldn't surprise me a whole lot if we came back down to retest the yellow line so that it cleared out all the longs before our next big run up. It really wouldn't surprise me. I mean, that's the way these exchanges work. I mean, they see the order books, all the limit orders on the books. They want to clear out the longs before it pumps, and they want to clear out the shorts before it dumps. So that's like why when we were shorting this double top here before we did this short, this is why this played out, and you'll see that this top is actually higher than this top, so that it cleared out all the shorts. Same thing here. Everyone was shorting because it dropped below 20,000, and so what's the best thing for it to do? Wake up, right? And then basically continue its descent. So it's like, so that's why it always says whatever you think it's going to do, most likely it's the opposite. In fact, if you look at your P&L, and especially when you first started trading in the beginning, and if you would have just done the complete opposite of what you did in the very beginning, chances are you would have been more successful. And so that's the whole thing. I almost dropped my phone there for a second, but that's the whole thing. Is whatever is the most ironic thing to happen is usually what mostly likely is going to play out. So it wouldn't surprise me, especially on a 3-day weekend of a holiday, and as brutal as this bear market is, it really wouldn't surprise me for this to come down and retest. That's why my stop loss is here, because if my stop loss gets triggered, then that would signal a trend reversal. Really more so if it was down here below 17.5, but we're just so close to this yellow line that has always indicated the bottom. That's why for me, it's just one of those things. I just have confidence in it, and my stop loss isn't that far away from it. So low percentage of your account, low leverage, you should be good. But here's the thing though, is we keep testing this daily open as support or as resistance. I mean, literally you can see we wicked above it a few times. For some reason, it just can't get above the daily open. So if we do get above the daily open and test it as support, then obviously I believe the monthly open is in play, possibly the weekly open.
So maybe we short the monthly open. So we're long right now, we'd short the monthly open. I mean, if it happens during the weekend.
Yeah, I mean, if you walked up to someone on the street, like I said before, and said, I'm about to enter a long, inside of a bear market, right
on a 3-day weekend.
I mean, maybe you can look back on the last 4th of July and see, did we pump last 4th of July or did we not?
Daniel says the yellow line breaks, streams of yellow will run through crypto owners' pants.
or are all the smart buyers, setting their limit buy orders under the yellow line?
I think that's the case.
2020 volatility. So that's probably why March 2020 only lasted 7 weeks below the yellow line, is because a lot of people had a lot of, pressure there, like a lot of buy pressure. Now, if we just take the drawing tool, you can kind of see, we came down here. I'm on a laptop, so it's not going to be the most pretty, but you can just kind of see this thing playing out. And I think this could possibly have some more room to the upside. That's just me. I personally think that this could be what we see play out.
I like that.
And whether we have a breakout right here on the weekly open, or even if it comes down here and then hits this, and then instead of going up, literally it just starts to kind of go down, that also is a possibility. But the whole thing though is I think we have at least I think we have more room to the upside. Now, could I be wrong and we break out right here down and then we hit my stop loss? Sure, that's fine, because I'm not losing much. That's why you guys have to time your entries correctly. As long as you time your entry correctly and set your stop loss to where it is a tight stop loss, but that risk reward ratio is in your favor, you're always going to do well. You just got to kind of keep common sense at play, recognize the key horizontal lines that you're at. Keep in mind this yellow line that indicates the bottom. And that's why I feel, we're seeing higher lows. That's why I feel comfortable going long. It's because my stop loss is so tight. If I didn't have my stop loss right here, there's no way in hell I'd ever go long. I would basically wait, unless you had a different strategy. Like Naeem's strategy is a great strategy, because what he's doing is he's lowering his average entry price because he knows that it's
I've got 10% remember we said to each other we weren't going to hold a trade overnight, but I'm testing a new rule right now, which is if it's only 10% of my account balance and I'm dollar cost averaging, I don't mind holding it overnight because it's a swing trade leverage. It's just a new like experiment that I'm messing. I always experiment with things, um, like there was one time where I started experimenting with orders at breakouts and breakdowns, and I was using buy stops and sell stops, and now I use that frequently because it's such a good strategy. Malik says this: do you guys think Satoshi is alive? If so, they say he accumulated almost 1 million Bitcoin. He didn't cash out at 69,000. That guy must be a diamond hand, or is he dead? Or did he lose his keys? Damn, I would have cashed out. What do you think, Josh? You think Satoshi's alive?
So it's funny because Charlie Shren is for some reason on the live stream on my phone it's showing that you're showing something about Celsius. Let me see real quick. Stop share. Okay, maybe it's just my phone messing up. But essentially, guys, so Charlie Shren, I had the opportunity of meeting with him recently at the Binance party in Austin, Texas. So Naeem and I were both at what was that CoinDesk event or event? I think it was called Consensus, right? Obviously.
Yeah.
So we were there, and we were trying to get Naeem into this not Bybit, but the Binance party, and there were so many people there. They weren't even letting people up the elevator. They were literally like, "Oh no, you can't."
Dude, I had a speaker pass, and I went up to the guy, and I'm like, "Could I get in?" He's like, "We've hit capacity." I'm like,
"Yeah,
this makes no sense."
He was like, "Hey man,
I'll go speak about this later."
Can't withdraw in order to get up these stairs. But no, but just to keep this short, guys, I ran into Charlie Shren, and he was friends with Satoshi Nakamoto. He was one of the first investors of Bitcoin, and he was, like a lot of you, if you're in crypto, you know who he is. He was in that documentary on Netflix called Banking on Bitcoin. I think they might have taken it off, but it was one of the highest streaming, or it was one of the most watched documentaries. And so anyway, we're working on getting him involved in this film project we have right now about Satoshi Nakamoto. And ironically enough, it has a lot to do with Hal Finney. And when Hal Finney died, he used this company called Alcor to basically freeze his body. And so the idea is that when technology advances in the future, enough that he'll be able to unfreeze himself, kind of like Walt Disney, and then, be able to, come back alive or whatnot. I personally would never do that. And we'll cover some of those reasons maybe later if you guys are interested. But there's a lot of people that think Satoshi may be Craig Wright because he has access to the Genesis block, which has been verified by Gavin Andresen, which is one of the lead developers on Bitcoin. Also, there's a lot of people that think Hal Finney is Satoshi, because he literally the first Bitcoin transaction that was ever sent, was to Hal Finney's wallet, right? And so it's going to be very interesting. We're going to have a movie that's going to be not coming out soon, but it's going to be in pre-production before too long. We're just raising the final parts of the money for it, but it's going to be a very interesting look on Satoshi. I mean, Satoshi translated in Japanese means of central origin. It was created on NSA's, SHA 256. So it is possible that there could be some back door that no outside researcher has been able to discover. And that basically, ties in also with the double spend issue, also known as a 51% attack. But also there's another interesting website. If you're interested in the history of Bitcoin, very interesting website called That's BTC, not Bitcoin.com. So I'm actually going to put it in the chat right now. So it's called That's BTC, not Bitcoin. .com. So you guys can go ahead and check that out. I just sent it in the chat there, and it's just an interesting look at the history of Bitcoin and how they killed the original Bitcoin because they're basically the central banks. Basically, what it's saying, and it has some government documents in there, but they're saying the central banks basically not just killed Bitcoin, but through the segregated witness update known as SegWit, they killed the transaction speed. And they lowered the block size, and they did all these things. Because if you actually go back, and I'm glad Naeem mentioned Bitcoin Cash, is because it is a fork of Bitcoin. And the thing is, Roger Ver gave my buddy like $30 million one time to do one of the startups, and Roger has this whole island that he was trying to build out as well, like a decentralized Bitcoin island. But the whole thing is, though, guys, is it's just a very interesting history. I mean, you definitely got to check it out. That's BTC, not Bitcoin. I don't want to go too far into it because it'll open up a whole other thing. But yeah.
Michael, and thank you for that, Josh. You are a fundamental expert in my eyes. Michael says, is it safe to say that we have bottomed based on all the technical analysis? I'm concerned how crypto will behave if traditional markets continue to crash. Well, I'll say this, Michael. Show me an asset that you could have bought in January of 2020 and still be up 100% on that position, other than Tesla. Bitcoin and Tesla are still the apex assets of the market. I think Tesla might even come further down. It hasn't even crashed enough, in my opinion, but especially with them missing their Q2 delivery estimates this month. But anyways, it's still an apex asset is the point. And so, you look at Meta, you look at PayPal, you look at a lot of these stocks and equities, and they are not performing too well if you would have looked at January 2020 performance till now. And so, of course, if equities continue to come down, if we continue to see this trend, continue, then Bitcoin has the potential of coming down. Now it's broke its 2018 previous all-time high. And so, it's definitely not a surprise that we're having a cup of coffee here right at the 2018 previous all-time high. So the best thing to do, obviously, and I watched this with Michael Saylor's interview today, is the worst thing you can do right now is stop buying Bitcoin. And the other worst thing you could do is to sell your Bitcoin right now, right? It's the time to be accumulating, and you always want to have those separate portfolios for your long-term holdings and then your day trade and your swing trading portfolio. And so I think this is a great opportunity to take advantage of the short-term volatility, because that's what trading is. Some people trade for a living. Some people trade for fun. Some people just invest in assets for the long term. So you have to choose which boat that you want to be on. And you could be on multiple different boats. You just have to make sure that you're disciplined enough to keep those allocations separate. So Steven says, Bitcoin, let's go. So if you think Tesla has got more room down, so is BTC. It's not rocket science. That's what Dara says. I think Tesla has room to go down just because of other factors in the EV market right now. So it has nothing to do with Bitcoin, but we've seen Tesla come down actually with Bitcoin not coming down. So there's not a correlation there. It'd be interesting to see BTC against Tesla though. Wouldn't that be an interesting chart?
Against Tesla, some people are saying Elon's actually a part or they say that, some are claiming that he's actually Satoshi. But if you read the original Satoshi Nakamoto Bitcoin white paper, you'll be able to see that even Bitcoin Cash is more like the original Bitcoin than what they're calling Bitcoin now. It's supposed to be a peer-to-peer digital electronic cash system. It's designed to be used, not designed to be held. We're not supposed to hodl. We're supposed to use this technology, because by using this technology, we can liberate humanity through the reins of the central banks and the Federal Reserve and other shadow banking industries and organizations. And so it's designed to be used because technology can either liberate humanity or technology can destroy and enslave humanity. And so what they've done is they basically, like I said, killed the block size, all of that. And it's very, very interesting stuff when you get into it.
Yeah, this Bitcoin and Tesla chart is really interesting. I'm going to actually have to look more into this after this stream because I like this chart a lot. Very interesting chart. I may start using it.
We're pumping above the daily open right now in 4 hours, so let's hope we can test it as
I'm telling you, man, equities closed at their monthly open. Look at this 1 hour volume here. It's like we're longing the bottom of this volume. I mean, somebody obviously put their money where their mouth is here to pump Bitcoin up to get that monthly close above 19,798. So I'm thinking, to me, I'm seeing some sort of like ascending triangle here. I'm not going to draw imaginary lines, but I'm just betting we at least get to that monthly open. It's like you said, Josh, we're not asking for much. Not with this long position.
Man, we're really not. We're not asking it to go back up to 69. And but the thing is, like you said, the equity markets. This is a great question for you, Naeem. So the equity markets closed strong, and they did go back up to the monthly open, correct?
Yes.
Okay, so that leads us to believe, since Bitcoin follows the S&P, that could possibly be the case. But here's my question: is, and you're the perfect person to ask this question too. Why is it when Bitcoin had the recent double top, and the equity markets, went above the double top, but however Bitcoin failed to breach the double top and therefore it went down? Like, how would you explain that deep correlation? Or how would you explain that if you had to say? Was it also because it was a weekend and it just closed above the double top, and since it was a weekend and Bitcoin's 24/7?
No, I would argue that that's a great question. I would argue that Bitcoin, it did follow the rule. And so the rule is that at least with market structure, there's a correlation. And so it did form a higher high. So, theoretically, it followed the market structure. But I see what you're saying. It obviously, it did it with a lot more weakness because it didn't go past the June 15th candles and price action. So if it were to do it with the same strength as the S&P 500, it should have done that and went to 24,000. But I would argue that, you're right 100%. Actually, during that whole weekend, it didn't. It stayed with a lower high, but it was just at some point, I believe this was, Asian market session here, 2 a.m. It actually went up and formed a higher high. So that, it followed the S&P 500. So what that means is Bitcoin is just weaker than the S&P 500 right now, and investors are not as confident in Bitcoin as they are with the equity markets. And so you can clearly see that as well with the Bitcoin to SPY chart and how much weakness that has shown, and closing its first weekly candle fully below the 200-week moving average. I mean, this is something that we've never seen before. I mean, even in 2008 capitulation, we stayed fully above the 200-week moving average with Bitcoin's correlation against the S&P 500. And then in March of 2020, we only got a wick below it. And so that's what would explain that specific scenario. So, I see what you're saying. And that's actually why one of the only alerts that I have on my charts right now for horizontal lines is Bitcoin against SPY. Because if I see this break down, and it's close to the line already, if I see this break down, then that's one of those odd cases where maybe Bitcoin is transitioning into a new price range. And it's going to eventually follow the market structure of the S&P 500, but not until it goes to a different destination, right? And so I am monitoring that, and I'm aware of that, and I'm waiting to see whether or not we do break down further for Bitcoin against the SPY. And if we do, then held to the long positions at that point, I would be looking for points of resistance to maybe short altcoins, because to me, that's an indication of another transitionary zone. And that could happen in many different ways. It could happen with Bitcoin later, that it starts to not perform against the S&P 500 as much. But right now we're certainly seeing, I would call, an invisible force not allowing Bitcoin to push up further. And because we know that if it does go up further from here, that could give Celsius that out and to reopen withdrawals and maybe even stay solvent. And so it almost seems as if somebody doesn't want that to happen. And we know the real liquidation price is down here at 12,000 for just one of their positions. But what I think needs to happen is I think Celsius just needs to, at this point, come out and say, okay, like, we're done, we're bankrupt. Like, they need to just close the door, and that could actually allow Bitcoin to go and follow its destined path. I think a big issue right now, and it's something that does frustrate me a little bit, is the fact that Celsius is keeping their mouth shut, and they're frozen. They're not doing anything about the situation that they're in. And so I think that that's certainly concerning. I think that has to also do with the uncertainty right now with Bitcoin, and people are fearful to get into Bitcoin because they don't know if they're just going to get the rug pulled on them with Celsius selling their own positions. So Rawan says, hey, Naeem, could you chart Apple on the basis that we're in a bear market? Essentially, where do you think Apple's bottom would be?
100%. I gotta open the door real quick. I'll be right back.
No, it's cool, man. We'll wrap up this live stream soon. If you guys have any other questions, feel free to throw them in the chat. And, you know, when we're looking at a big company like Apple, just notice how March of 2020 we came above the 50-month moving average. We didn't even get to test it, but in 2018 we did test that 50-month moving average. So I think 50-month moving average at this point is target number one, right at that big even of $100 US. Would that be concerning to see? I mean, it could happen in many different ways. This does not mean Bitcoin has to capitulate even further, right? We could see one move to the upside and then we see a decorrelation between assets. I mean, here's the thing. If you pull up any of these assets against Bitcoin, you're going to be seeing a different type of chart, right? They perform differently. This is a very different chart than Bitcoin against Tesla. So, you know, with separate equities, I don't know if we have time to go through each and every one of these requests on this live stream, as it has already been an hour, but smash the like button for the YouTube algorithm, snipers, if you support this content. I think we're going to wrap this up here. And let's see here. Shrek says, never mention Bitcoin Cash again. That's funny. I'd like to wait for Josh. I don't know if he left us, but anyways, thank you guys for tuning into this Saturday live stream. I'll quickly wrap up here and then we'll say goodbyes. But Bitcoin is inside of the range with a resistance of 23,795. We currently have a support of 17,204. We're inside of a symmetrical triangle in between these two important levels. And at this point, I am expecting that we could potentially test the monthly open at 20,000 US dollars, maybe even a little bit further above that into this 3-day weekend. But there is something that is concerning on the daily time frame, which is the increase in sell pressure right now. We're seeing over the last few days continuous increase in sell pressure. And so one thing I am monitoring for this daily close is how the volume comes in. Are we going to be seeing more volume than what we saw yesterday? And is that going to be to the sell side or to the buy side, right? Ideally, we see a green candle close just to put the brakes on this rising sell pressure, or else it will continue to be a concern. And at this point, if Bitcoin does break below 18,626, that's our first confirmation that we are going to be testing that major range support at 17,204. That's about 7% downside there. And then I think for the bulls, we obviously need to conquer this weekly open. 21,000 US dollars is going to be very important next week as well. We can even already move this green line up here because that's our previous weekly open. And so that is going to be significant for the next 7 days. And so I think that for any bullish case at this point, we need to get above 21,000 US dollars. And then that could open up the door to 24,000 US dollars. So with that, thank you all for tuning in to the Snipers channel. I believe Josh is still answering his door. I appreciate each and every one of you tuned into the channel, and I will see you guys next time. Snipers out.